So hello everyone, this is CA Sanidhya Saraf, your friend, mentor and coach. So I believe you are doing great and you are enjoying this revision series of standards of auditing, right? So in this very video, we are going to revise essay 210, that is agreeing the terms of audit engagement, and this video is important for both the CA Inter and CA final students, right? The notes that I'm going to use for this very standard, you can again download this note from www.apnamentor.com, or if you have my books already, then you don't need to download the notes. So now talking about essay 210, agreeing the terms of audit engagement. So this is a very simple standard, and this essay deals with auditors' responsibilities in agreeing the terms of audit engagement with the management and where appropriate those charged with governance. So basically, whenever as an auditor, I am going to accept the offer to do the audit of a company, I am going to impose certain preconditions. I am going to enter an engagement letter if the management agrees to the preconditions imposed by me, and if a proper engagement letter is agreed upon and the management is ready to accept its responsibilities, only then I'm going to accept the audit. Otherwise, I'm not going to accept the audit. So this essay deals with what are the preconditions that I'm going to impose for the audit, what are the various contents of engagement letter. Once an engagement letter is agreed upon, when can the terms of engagement letter be revised? So these are the various topics that you need to know in this very standard, right? So what are the preconditions of an audit? What are the preconditions of an audit? Preconditions का मतलब क्या हो गया? That before accepting the audit, I'm going to impose certain preconditions. That okay, boss, I'm going to impose the conditions before the management. That okay, boss, you need to accept this all things. Only then I'm going to accept the audit. So basically, the precondition is regarding FRF. That the FRF used for the preparation of financial statement should be acceptable. So I am going to determine, I am going to ascertain whether the FRF used for the preparation of financial statement is acceptable or not. Secondly, I am going to obtain management representation. I am going to obtain management representation regarding three things. First of all, I am going to obtain management representation regarding FRF, whether the FRF use is acceptable. Secondly, I am going to obtain the representation from the management regarding internal control system, whether the internal control system implemented is effective. And thirdly, I am going to ensure that I am going to get access to all the records and information that I need for the audit. And I must get unrestricted access to all the persons within the organization with whom I need to talk about in the audit. Only then I am going to accept the audit, right? So I am going to obtain management representation as the auditor regarding three things from the management. First of all, whether the acceptable FRF is used in preparation of financial statement. Secondly, necessary internal control systems implemented or not. And thirdly, whether I'll be provided with all the books and information, all the records, and I'll be given an unrestricted access to persons within the entity that I need to obtain the audit evidence. Now, how should I determine the applicable FRF? That is one of the question. So few examples are given that I can see the nature of entity, I can see the purpose of financial statement, I can see the requirement of law, and accordingly I can determine whether the FRF use is acceptable or not. For example, if it's a section 8 company, then the FRF requirement is going to be different. If it's a profitable company, then the FRF requirement is going to be different. If it's an insurance company, then the FRF requirement is going to be different. The next question is, what are the various contents of engagement letter? So basically, if we talk about engagement letter, the engagement letter should always be in writing. Engagement letter can never be an oral agreement between the auditor and the management. It should be in writing, whether it is drafted in the form of a separate engagement letter or it in some other way of communication, but it should be in writing. And the engagement letter is going to include what is going to be the objective of my audit, what is going to be the scope of the audit, what are the various responsibilities of the auditor, what are going to be the responsibilities of the management. So that way I'm going to include all the responsibilities of the management in the engagement letter as well, so that later on management cannot deny and cannot escape from its responsibilities. What are the steps I'm going to perform regarding planning of the audit, regarding performance of the audit, how I'm going to identify the applicable FRF, which is the applicable FRF, what about the fees computation, how the fees is going to be decided, right? So all these things must come in the engagement letter. The next topic that you need to know in the standard is, what if limitation is imposed by the management before accepting assignment itself? What if limitation is imposed by the management before accepting the audit assignment? Then in that situation, I'm not going to accept the assignment. I'm not dying for work. If you are going to impose limitation before accepting the audit, I'm not going to accept the audit as of all. I'm not going to accept the audit. Unless and until it is the mandatory requirement of law, I'm not going to accept the audit. The next topic is change in terms of audit engagement. Once the terms of audit engagement are agreed, when can the terms be changed? So suppose the terms are agreed and the management has agreed to provide me the unrestricted access to all the information, all the records, etc. And later on the client requests me to change the terms of engagement. For example, later on the client is requesting, I cannot give you the income tax record. Then as an auditor, what should I do? I should consider whether the proposed terms of engagement provides a lower level of assurance. If the proposed terms of engagement is not providing me a lower level of assurance, that is not affecting the degree of assurance, and I can easily agree to those change in terms. But if that is actually lowering my level of assurance, then I need to ascertain whether those terms can be accepted. So if the proposed terms do convey a lower level of assurance, then I should obtain reasonable justification from the management that if you are refusing to provide me the income tax record, what is the reason? If they are saying that it is destroyed by fire, then that is a genuine reason I can accept. I can continue with the audit, I can give a disclaimer. But if the management is not agreeing to give me a reasonable justification, they are just saying we cannot provide you the records, but there is no proper justification by the management, then I'm not going to agree to them. Right. So if the reasonable justification is not given, I will withdraw if legally permissible. I'm not going to continue with such kind of audit, and I will consider the need to report, whether I need to report to the legal authorities, to the regulatory authorities, to the board of directors, to the shareholders. The next question, the last topic that you need to remember is, what are the circumstances that may warrant revision in terms of audit engagement? What are the circumstances? ऐसा क्या हुआ? ऐसे कौन से circumstances आए that may warrant revision in terms of audit engagement? तो बॉस, when I accepted the audit, मैंने किसको देखा था? मैनेजमेंट को देखा था, उनके कंट्रोल्स को देखे थे, FRF को देखा था, नेचर एंड साइज ऑफ एंटिटी को देखा था. So if the senior management has changed, then that is one of the scenario which may warrant revision in terms of audit engagement. If the FRF reporting requirement has changed, if the FRF requirement has changed, if the reporting requirement has changed for some reason, maybe conversion of company, the conversion of structure of company, if the ownership structure has changed, that may be a reason for the revision in terms of audit engagement. If the nature and size of entity has changed, private company to public company convert ho gaya, that may be a reason. If the terms of engagement letter are revised, that may be a reason. Yeah, maybe when I entered the audit, the scope that we ascertained, the scope that we decided, there was a misunderstanding of scope and objective. So that can be one of the genuine reasons कि भाई scope के understanding में समझ गलती हो गई थी, scope को समझने में गलती हो गया था, तो misunderstanding of scope and objective. So these are the various reasons that may warrant revision in terms of audit engagement: the change in senior management, the change in FRF, the change in reporting requirement, significant change in ownership. They have stressed upon significant change. Not just simple change, there should be a significant change. Similarly, significant change in nature and size of entity, the revised terms of audit engagement, misunderstanding of objective and scope. Further, the essay also says that if there is a conflict between the FRF and law, then in that situation I should discuss the conflict with the management, that FRF कुछ और बोल रहा है, law कुछ और बोल रहा है. And if the additional requirement that is given by FRF or law, that cannot be met even by additional disclosures, then we are going to modify the report as per SA 705. So again, it's a simple standard, SA 210. You can just revise the standard once again and you can go through the questions.